Now speaking, Heather Harwood, Investor Relations. DocuSign CEO Alan Thygesen and CFO Cynthia Gaylor reported on their first fiscal year 2024 earnings call. They provided GAAP and non-GAAP financial measures, non-GAAP weighted average share counts, information regarding free cash flows, and billings. They reminded the audience that some of the statements made are forward-looking and are subject to known and unknown risks and uncertainties that may cause actual results or performance to be materially different. They encouraged investors to consider all measures when analyzing their performance and to refer to the earnings press release for a quantitative reconciliation of the non-GAAP financial information to the most directly comparable GAAP measures. Now speaking, Alan Thygesen, CEO. DocuSign reported strong financial results for the first quarter, exceeding their guidance. Total revenue was $661 million, up 12% year-over-year. Non-GAAP operating margin was 27%, driven by continued focus on profitability and efficiency. DocuSign is accelerating product release cycles in fiscal 2024 and released a number of new products this quarter, including web forms, which saw early traction across verticals such as financial services, real estate, healthcare, and life sciences. ID verification for EU-qualified e-signature to replace face-to-face verifications and handwritten signatures under EU law, and agreement summarization, enabled by integration with Microsoft's Azure OpenAI service. DocuSign is investing in product-led growth and self-serve capabilities to drive more go-to-market efficiency and deliver better customer experiences. They are also making investments to expand their presence in international markets like Germany and Japan. Lastly, they have rounded out their leadership team with key hires, including Blake Grayson as CFO. Now speaking, Cynthia Gaylor, Chief Financial Officer. DocuSign had a solid start to its fiscal year, exceeding its top and operating margin guidance. Revenue grew 12% year-over-year to $661 million, while subscription revenue grew 12% to $639 million. The company added approximately 45,000 new customers during the quarter, bringing its total customer base to 1.4 million, a 13% year-over-year increase. Dollar net retention was 105% for the quarter. Gross margin for the first quarter was 83%, compared with 81% a year ago, while subscription gross margin was 85%, compared with 84% a year ago. Non-GAAP operating income reached $176 million, compared with $102 million last year, delivering a record non-GAAP operating margin of 27%. Operating cash flow in the first quarter grew 19% year-over-year to a record high of $234 million or a 35% margin. Free cash flow for the quarter was $215 million, or a 32% margin. The company repurchased over 700,000 shares during the quarter for approximately $40 million. For the second quarter and fiscal year 24, DocuSign anticipates total revenue of $675 million to $679 million in Q2, or growth of 8% to 9% year-over-year, and $2.713 billion to $2.725 billion for fiscal 24, or growth of 8% year-on-year. It expects subscription revenue of $658 million to $662 million in Q2, or growth of 9% year-on-year, and $2.64 billion to $2.652 billion for fiscal 24, or growth of 8% to 9% year-over-year. Billings are expected to be flat to 1% growth year-over-year in Q2 and 3% to 4% growth year-over-year for fiscal 24. Non-GAAP gross margin is expected to be 81% to 82% for both Q2 and fiscal 24. While non-GAAP operating margin is expected to reach 24% to 25% for Q2 and 22% to 24% for fiscal 24. Citi analyst Kylie Tobin inquired, "What are the areas of focus for Blake, Dimitri, and Kurt as they join the company?" Alan Thygesen replied, "Yes, Blake will be taking on the CFO role and executing our operating plan to uncover top and bottom line opportunities. Dimitri has joined us as President of Product and Technology and brings a wealth of experience in enterprise software. Kurt has taken on the security organization, which is vital for managing our highly sensitive documents and processes, ensuring customer trust. He will continue to grow this responsibility as we move forward." Citi analyst Kylie Tobin inquired, "Cynthia, with the 8-point beat on billings this quarter, what was the trend for early renewals relative to expectations? Did the guidance raise reflect an operational beat with potential pull forward?" Cynthia Gaylor replied, "Thanks for the question, Kylie. We're pleased to report that Q1 billings exceeded our expectations due to strong on-time renewals from our installed base. This was the main driving force of the beat and is reflected in our current guidance. We believe our guidance is appropriate considering the softness we're seeing in expansion rates and other metrics." Bank of America Merrill Lynch analyst Brad Sills inquired, "Cynthia, what is the focus for Agreement Cloud going forward? Are there opportunities for upselling products like eNotary and Analyzer to the existing base?" Alan Thygesen replied, "We are focused on delivering a comprehensive suite of workflow tools across the agreement journey and intelligently assist at every stage. We've made progress in Q1 with releases emblematic of this focus, and the biggest change in our roadmap is the advent of generative AI. We have products like Insights that leverage earlier generations of AI models, and we're investing heavily to unlock the category. We released some new products and will release more at Momentum. We'll discuss AI further during the call." JP Morgan Chase & Company analyst Mark Murphy inquired, "Cynthia, can you explain why subscription revenue declined in Q1 and then returned to some growth in Q2? Is this a pattern that will repeat in the future?" Cynthia Gaylor replied, "Q1 revenue was lower than expected mainly due to fewer days in the quarter. Revenue per day increased, however this was offset by the number of days in the quarter." JP Morgan Chase & Company analyst Mark Murphy inquired, "What signs are you seeing in residential and commercial real estate that may indicate a stabilization or optimism for the second half of the year?" Cynthia Gaylor replied, "In response to the question, I would say that our diversified customer base helps mitigate risk in uncertain markets. We are seeing softer customer sentiment in real estate and certain financial services, but other verticals such as manufacturing and business services are showing strength. We don't really know what the future holds, but our diverse customer base provides some insulation from potential downside." Jefferies analyst Brent Thill inquired, "Alan, what changes have you observed quarter over quarter in the overall environment?" Alan Thygesen replied, "The macro environment is holding steady. Performance in the SMB segment is better than in the enterprise segment due to larger companies being more sensitive to the business cycle and their ability to tighten spending. We are growing faster internationally than domestically, with some sectors being stronger than others. In particular, parts of financial services are a bit challenged, but by no means all. Our product roadmap and new releases should have a positive impact on the environment going forward." Jefferies analyst Brent Thill inquired, "Cynthia, could you explain the rationale behind the large margin decrease from 27% in the quarter to 23% for the year?" Cynthia Gaylor replied, "Q1 showed strong performance in terms of margin. Our focus has been on profitability and disciplined investments, which is what led to the positive results. We anticipate continued investment through the year and therefore a slight decline in margin by quarter, but this will result in a higher run rate and bow wave going into next year. Despite this, we remain focused on our long-term target range and have even raised it from our 90-day prediction. We are committed to investing for long-term growth opportunities while remaining disciplined." Wolfe Research analyst Alex Zukin inquired, "What is the priority list for reinvigorating the company's growth engine? How does AI monetization, new products, and PLV opening up fit into that plan?" Alan Thygesen replied, "Overall, I'm incredibly excited about the opportunity that AI presents to us. In response to the question, I would say product innovation is the biggest driver of our medium to long-term growth, while AI has the most potential for unlocking value in the long term. We have developed deep experience in building agreement-specific models and a large data set of agreements, allowing us to extract more value from AI models. We are also leveraging partnerships with cloud vendors to take full advantage of their innovation." Wolfe Research analyst Alex Zukin inquired, "Cynthia, what were the renewal trends like a year ago and how did that inform your plan for this year? Are you expecting inline or below average performance on renewals for the rest of the year?" Cynthia Gaylor replied, "Thanks for the question. Our on-time renewals rate was consistent in Q1, leading to a larger amount of spillover from the quarter which is now baked into our guidance for Q2. We attribute this to better execution from our team and a macro dynamic of customers carefully managing their budgets. This outperformance on billings in Q1 is a timing issue that's accounted for with our full-year guide and it explains the partial push-through relative to other options." Alan Thygesen replied, "In response to the question, I would just like to add that we have been very intentional about encouraging our teams to prioritize renewals and usage of our existing contracts. This included making adjustments to our organization and incentives programs, which Steve and his team should be commended for." FBN Securities analyst Shibli Sirafi inquired, "Can you elaborate on the potential for double-digit revenue growth through product innovation, self-service and AI?" Alan Thygesen replied, "Yes, last year was a period of significant change for DocuSign. We took a number of steps to lay the groundwork for future growth and we are already seeing positive results. We remain optimistic about our long-term potential and we are continuing to invest in product innovation, self-serve, the partner channel and operational efficiency. AI could be an additional driver of growth when we issue our guidance for next year." FBN Securities analyst Shibli Sirafi inquired, "Can you elaborate on the product innovation you mentioned, specifically referring to the 3 new releases, web forms, highly regulated markets, and ID?" Alan Thygesen replied, "Overall, I'm focused on improving our pace of innovation and product releases. We have done a great job so far this quarter and will be sharing more details at our user conference next week. In the near future, we plan to deliver searching capabilities across agreement repositories, something no one else has done yet. Additionally, we are introducing orchestration, which allows customers to pick components from the DocuSign suite and third-party apps and combine them to create custom workflows. This capability is also unprecedented in the agreement space and should unlock significant potential for our category. Piper Sandler analyst Rob Owens inquired, "What has changed in terms of spend to drive accelerated product development over the last 90 days?" Cynthia Gaylor replied, "Q1 saw a slower start to the year with lower spending across categories. We expect Q2 to come down slightly in Q3 and Q4 to moderate in the low 20s. The annual spend is still in line with our expectations for the year." Piper Sandler analyst Rob Owens inquired, "What pricing trends are you seeing in the e-signature market for SMB and enterprise customers?" Alan Thygesen replied, "Overall, the competitive landscape in our industry has grown more intense in recent years. However, we remain a market leader and are able to command a premium due to our convenient services, higher sign rates, faster time to sign, enterprise-grade capabilities such as integrations, security, privacy, etc. We strive to be agile in larger enterprise deals, where the price environment is highly competitive, in order to ensure that we don't lose business unnecessarily. As we continue to provide more value to our clients, we hope to increase our dollar footprint with mid-market and enterprise customers." Morgan Stanley analyst Josh Baer inquired, "How is customer interest in CLM and Agreement Cloud being impacted by the potential of AI to improve solutions and add value? Are customers re-evaluating the technology, or are their enterprise customers considering an in-house approach? What is the expected timeframe for realizing the potential benefits of AI?" Alan Thygesen replied, "There is strong customer interest in the CLM category, and we are seeing investments from our largest partners. We believe the demand environment is robust with no hesitation due to AI. Despite this, CLM does have longer time to value and can be impacted by macro and customer caution. We want to redefine the category to make it software first, quick to set up, and with analytics and insights driven by AI. Leading companies across industries are engaging with us to use CLM to quickly analyze agreements, assess risk, create efficiencies, and even extract business value. We remain very bullish on the category long-term and intend to lead the way in reimagining it." Morgan Stanley analyst Josh Baer inquired, "Cynthia, what factors contributed to the record professional services revenue this quarter?" Cynthia Gaylor replied, "In the professional services and other category, there was a Q2 deal that fell into Q1, resulting in an unexpected increase. This was due to an on-prem software component part of our legacy product suite." William Blair & Company analyst Jake Roberge inquired, "What new opportunities is Steve looking into for direct sales motion?" Alan Thygesen replied, "Our main business continues to be enterprise sales software, and we have a strong team in place to ensure the successful execution of that. We are working to expand our capabilities in all facets, such as marketing, training and bundling, to better serve our customers. Steve has been instrumental in helping us reach this next level, and as we continue to develop and deploy products, our sales channel is prepared to take advantage of any growth opportunities." William Blair & Company analyst Jake Roberge inquired, "What monetization plans do you have for your generative AI technology, and when can investors expect to see results?" Alan Thygesen replied, "I expect AI features to be bundled with our baseline products and offered as separate add-ons. For example, our Insights product, which is an AI-driven analytics product for CLM, is available as a standalone SKU or as a premium bundle. We're still learning about how customers will use this and what the key value drivers are, but we remain focused on delivering maximum value to customers and capturing value for DocuSign when pricing these features." Wells Fargo securities analyst Michael Turin inquired, "Can you provide any insight into when we can expect the expansion headwinds to settle and if there have been any changes in gross retention rates since last quarter?" Cynthia Gaylor replied, "Thanks for the question, Michael. Our dollar net retention rate for Q1 came in at 105%. We expect it to continue to decrease in Q2 due to customer buying behavior, budget scrutiny and macro factors. As we are a land and expand model, expansion rates are decreasing as companies land, which is reflected in our dollar net retention and other metrics." Wells Fargo securities analyst Michael Turin inquired, "Can you provide an update on gross retention rates?" Cynthia Gaylor replied, "We don't disclose our gross retention, but we do measure expansion rate, which is driving our compression. We also look at churn rates internally." Oppenheimer & Company analyst George Iwanik inquired, "Alan, could you share more about your approach to expanding in international markets and how that is impacting business growth?" Alan Thygesen replied, "Overall, our international business is showing some softness, but this is relative to our domestic business. Despite making up only 25% of our total revenues, the potential in international markets is vast and we are confident investing in it. Our efforts include expanding direct sales in major English-speaking countries and certain European countries like France, as well as Japan and Germany. We also leverage self-service and partnerships with SIs, distributors, etc. And on the product side, we are a qualified trust service provider in the EU and have dedicated teams for customer relations there. We are disciplined in which markets we're putting resources in and will rely on partner and self-service capabilities for the rest. We are excited and aligned in our investments in the international market. Oppenheimer & Company analyst George Iwanik inquired, "What progress have you observed with EHR interoperability in the healthcare industry?" Alan Thigeson replied, "The healthcare industry is ripe with potential for our business. We are already seeing insurers, hospital chains, and doctors' offices embrace digital sign-in solutions and patient registration disclosure. This is an early-stage market that presents low-hanging fruit opportunities for us, despite the higher bar to entry due to regulations. Our competitive advantage in this space is strong and we look forward to taking advantage of the possibilities it offers." MoffettNathanson analyst Kyle Deal inquired, "Cynthia, what is the impact of investing in the back half of the year on operating margins?" Cynthia Gaylor replied, "I expect our expenses to be higher in the second half of the year. We anticipate that the margin for the year will increase by 1 point, but we expect the run rate to stay the same. Our biggest expense is headcount, so as we hire more people it will naturally bring down the margin. We are always looking for ways to reduce T&E and third-party vendor spend." Alan Thigeson replied, "Thank you for joining today's call. We had a successful start to the year and we're continuing to work hard to deliver value to our customers and shareholders. I'm excited about our product roadmap and the investments we're making in innovation and talent. You can watch our 1-hour keynote at Momentum next Wednesday to see more of what we're working on. I look forward to sharing even more with you all throughout the year."